Good morning, legends. I'm really hoping that this is the last time I have to do a recorded video and I can live stream from now on, because the trade setups that I put out are so time sensitive. By the time I do a recording and edit it and put it online, sometimes we're just very, very close to an entry or the entry's been missed. So hopefully I'll be able to live stream soon. I am in the process of setting up my streaming office, so hopefully it won't be too long. But anyway, I want to talk about what the hell I have going on. Why does my chart have chickenpox? There's a very important lesson here that I discussed with my Discord last night. And just a reminder, guys, if you are wanting to learn this method in full, yes, I give you a lot of setups on YouTube, but I'm not there once I've done the video to hold your hand. And when it comes time to actually entering the trade, managing the trade, or taking your profit on the trade, that's why you need to be part of the full system. Anyone in the TTC tribe will tell you that I am there for you to find your entries, to manage your trades and take your profits, and I keep you informed the entire time, which is much more useful than just a once a day update. If you are from the TTC tribe, leave a comment below and let everyone know, is that true or am I just making things up? But before I get to this chart, I'm going to first talk about this one, because this is where the lesson starts. And if you're new here, welcome to the channel. We trade very differently to regular retail technical analysis. Over here, we're trying to find what the market maker is doing and how they're trying to trick us before they shift price in any one direction. So if that's the kind of thing that you are wanting to learn, be sure to smash that like button, hit subscribe if you're not already subscribed. And now let's get into what on earth is going on right here. So the message here was, when we're looking for a W formation, which is a signal of a trend reversal, the W starts with a low that is a high volume low, usually finishes with a stopping volume candle, and a stopping volume candle basically looks like a hammer, but it's specialized because it's at the bottom of a 3-level drop. It usually has a small body, a large wick, and a volume spike. When you see that, that would be this point here of the W. Then price pulls away and it comes back. If it is actually going to change trend, it creates the second side of the W. So the reason I have all of these circled is because if at this point you believed you were at the level 3 drop, there were many times here where the market maker was tricking you by giving you what could potentially look like a stopping volume candle just for price to pull away, then come back and actually give us a new lower low. So when you see this happening, you know it's a trick. And there's two ways to enter a trade for a trend reversal. One is on the second peak of the W, and the other is to let the right side of the W play out, break a level, then come back to retest, and on that retest is where you take your entry, and that retest usually will be around the 50 EMA or above it, or around a vector that is near it. So when you see these games going on, while we usually like to get the second peak of the W, you're putting yourself at risk to try and continuously keep grabbing it. So you're better off in a case like this going for the retest after it breaks the 50 EMA, because now the trend change is proven. So now coming back to this, it shows here that every time that was happening to you, look how many times price rejected the 50 and the 200 EMA. All of these yellow circles are the rejection of those EMAs, and then what made it even worse was the fanning out. Now the fanning out eventually leads to either price returning to the EMA or the EMA catching up to price. An EMA catches up to price if price consolidates. If price doesn't consolidate and it returns to the EMA, it's a potential change in trend. So what we can see here is we didn't get consolidation, we got price returning to the EMA, which is the potential change in trend. In addition to that, after we got our spike down here, so if you happen to catch yesterday's video, it was when price was around here, and I had mentioned that I think this had the potential to be a W, but wait to see if price returns to the zone. But I didn't particularly like that setup. I was really more interested in this 29,500 level, and I went into detail about why. If you're interested in learning more about that, just watch yesterday's video. But you can see here that we wicked right on that 29.5, and look how much volume came in that spike. Now leading up to that, we had a rise in volume here. So have a look at this spike low here, is this volume increase here, this one is this one, and then this one is this one right here. So that's what made me hesitate, because if volume is increasing, which is this one here, and open interest is increasing and price is dropping, that means that there is strength in the trend. So whilst this had the potential to be a first side W, my warning to the community was don't enter off this because the move needs to prove itself and you've got no confirmation if you're entering off this. You need to wait for the second side of the W. Whilst we were waiting for that, high level orders came in on Trading Light at 29,710, and we can see here there's a few candles that spiked into that level that held it. Eventually we got a vector candle and that became the second side of the W. Now again, would you have taken that? Well, for me, I follow my rules very, very strictly and I do not open trades at end of sessions. So this right here happened at the very end of US. The end of a session is always a trick because it's the market maker taking profit and there's no guarantee that that trend is going to continue into the new session. So the moral of the story is, whilst this is currently playing out, and that's great, it's not the kind of setup I personally would take. Now, some people are more aggressive than me and they would like to take a chance on it, and that's all good. I also do have the opportunity to be a lot more picky because I am long and I am short from very, very good positions. So if I take any extra trades this week, it's just going to be for extra profit. It's not that I actually need a new position. So moving on, this W turns out to have played out even though we don't like where it actually happened. I also don't particularly like single session M's and W's, but that's a conversation for another day. And now we do have that break of the 50 EMA right here. Now, the thing is, the way the rule works is the W formation forms at level 3. Then the rise side creates level 1, which should break the 50 EMA with volume. That's a tick right there. And it should then make a run for the 200 EMA, which is a tick there. From that point on, it will either consolidate or retrace. And that becomes your board meeting after level 1 rise. Here is more of a consolidation that held above the 10 EMA. So that right there, that little part there could be, at this point in time, it could very well be your consolidation, and this could actually be rise 2, in which case this is a very weak trend. If that actually turns out to be the case, this is a very weak trend because look at the move up for level 1 and look at the difference in level 2. It's possible we don't even get a level 3, or level 3 just returns back to the initial high of the day and then it's all over. Why I don't particularly like this is because when we zoom out on the higher time frame, look how we're sticking to the bottom of the range. So if this really wanted to push away from this level here that I spoke about yesterday, now look, the one good thing is that we do now have candle closes within that highlighted zone. Again, I won't go into detail because I discussed it in very high detail on yesterday's video. Whilst it's a positive that we've come in to rebalance some of that zone, we haven't had a strong shift out, and on the 4-hour time frame we're still between the 200 and the 50 EMA, which is a no trade zone. So yeah, if this was going to bounce off this support level, I really would have liked to have seen more strength from now. Now yesterday we had new longs open, so once the 29.5 got hit, new heat map orders opened at 29 and 28.5. I also marked the liquidation levels around those numbers just to see if there was anything worth taking out, and there is at 29,069 and 28,476. There's also still the 29,400, which is a 1 month liquidation. They're all still there ready to be taken. And also when we look left, we've got unrecovered vectors on basically every time frame here because this was a fast move to the upside. So no matter what time frame you look at, you're going to find vectors between 26,700 to the current price. They're going to come back for this, but when is the question? Are they going to move up into the mid 30s before they come down to grab this, or are they going to come grab this first? That's the question right now, and what we're waiting to see is if they break this range. The answer will come if they break this range. But let's have a look at the heat maps and see if those orders are still there. Now when I zoom out on this, it's looking pretty thin actually. I've got really nothing above price trying to short it that is of a high level, and the highest level I have are these two here, which is not significant, I can already tell by the color, but it is still at the 29 and the 28.5. But last night these were in the 1.2k. See how they're red here? So these were in the 1.2k. That means means that orders have closed in that level. So could that be a signal of a lack of confidence that we're going down there? Maybe. It's hard to tell when the heat maps aren't telling us anything other than looking at this delta. So when you have a look at what's going on the side here, this column here of all greens is the buys at each price point. This one is the sells at each price point. And this one, the second last column, is the delta between the buys and the sells at each price point. Now, when you're looking above and below price, and it's basically a sea of red, that means more people are trying to sell than buy Bitcoin right now. Whether they're trying to sell at higher prices or potentially have sell stops as we break ranges, there's just nothing here that's particularly bullish. And then again, when we have a look at the heat map, this is a 7-day heat map because this is where a lot of liquidity has opened up. So this means a lot of people are starting to try and guess directions now. When you look above and below, they're about equal. So we've got a lot of spikes here that are, moving up to this lighter color, which means more money committed. But we also have that below as well. So if we zoom in to this area, we can see here that the brightest area is below, which is at 29,200, and above it's 30,750. But this makes more sense to come for, to be honest, but market maker doesn't always make sense. So let's see, it really does depend on retail sentiment. If retail start feeling bearish, then the market maker might send it up to grab these ones first and vice versa. So we have to wait and see. It's really a matter of whether or not they break the range. If they do, I would say it's probably likely that at some point in time they're going to come for this 29.2. And when we match that up to a chart, that's going to be around about a 50% area of this vector candle right here. And then we would have to reassess from there whether there's more downside to come or not. But yeah, for me, I don't like the price action. I'm not taking any new trades. I'm happy to just sit and wait and see what happens, whether they can bring some momentum to push us out of this range. Would have thought it would have happened by now if it was going to happen, but maybe a news event will trigger it as well. Not that we really have any, because we've got housing starts today at 4:30 p.m. Dubai time, which is the annualized number of new residential buildings that began construction during the previous month. And then tomorrow we have unemployment claims. So it could be that one that does it. Same time, 4:30 p.m. Dubai time. By the way, you can go to this website yourself if you're looking for it, forexfactory.com/calendar. Click on the time up here and then you can adjust it to your own time zone so you don't have to do manual conversions. If you are looking for somewhere to trade this stuff, be sure to check out OKX. We've got a new deal for you guys. If you use the link in the description of this video, you can get access to a lucky draw. Let me show you how this works. So once you click on the link that is in the description of this video, you will be brought to this page. Just click on that Enroll Now button that you see and then follow the instructions to set up a new account. Once you've done that, scroll down on this page and you will see the option here to have a spin. You can use just the one spin by clicking on the button on the left, and then that will give you a prize. Or you can click on the 5 spins on the right and that will spin 5 times to give you a reward as well. And the more you trade, the more spins you get. So be sure to use that link if you're looking for an exchange to trade on and give yourself access to many free rewards. Now, completely unrelated, sort of unrelated, they're all markets, so they're kind of related, but I want to talk about the S&P and the NASDAQ because this might be the thing that ends up making a very, very big decision that will affect crypto, and it's not there yet. I just want to point out that what I'm showing you right now is the S&P on the daily time frame. And last night we entered a daily vector candle area of interest and we have not pulled away from it yet. So if we do break right through that zone, there's another weekly vector up until 47.92, and that is the final vector before the all-time high, which is just crazy when you think about all of the FUD about the economy and whatnot, that we're almost at the all-time high for the S&P. So we are now entering these zones and we're not rejecting yet, I should say. But this is something you need to keep an eye on, even if you don't trade other markets and you only trade crypto. Whatever happens when price gets into any of these zones is going to affect crypto as well, if it's a dramatic move. So definitely keep your eyes on this, because at any of these vector candles, there could be a strong rejection that changes the trend. And essentially, if that were to happen, what that would mean, if this this cannot break the all-time high, that would mean that you have a weekly time frame M formation, which is dramatically bad. Okay, but if price can break through these vectors, it will then break the all-time high, and then that could lead to a rally because that's going to bring in confidence. So it's not one way or the other right now. It's entering a zone that we really need to watch this daily and see what is going on. In addition to that, let's have a look at NASDAQ, because NASDAQ is, more so tech stocks, and this is probably even a little bit more relevant to crypto. But look at NASDAQ, same deal. So NASDAQ is in its last 2 daily vectors before its all-time high. It's in one of them currently right now, and I would say it's probably closed more than 50% of it. Let's have a look. It's right on the 50% line as we speak. So that's this red vector candle here on the daily time frame. It's trying to make its way through, and if it does, it's only got one more vector candle to go before it's at all-time high. So keep an eye on this, because this is make or break levels for both of these, and whatever they do will dictate what crypto does next. Now with Dixie, we've broken a very, very important key level. We're kind of in no man's land right now. Are we in the process of a retest of that level? Maybe, but there are a few vectors down further below, and with Dixie, the weekly kind of has my attention a lot more, because when we zoom out long term on the weekly, and this is from 2008, you can see that this pattern right here, after consolidating, repeated almost exactly the same right here. We had 2 touches to the top of the channel, then we came down, then we had a retest that failed to reach the level, then we came down to create the bottom of the channel. Into consolidation, same thing, 2 touches to the top, came down, retest that failed to touch the top, created the bottom of the channel. So you have to wonder if we're in that same part now, where we've just had this one touch to the top of the channel and we're moving away. So we would be in this part of it right here. The only thing is that in both of these two here, we held the 50% area of the channel, whereas currently we've broken it. So this may not turn out to be the same in the end, but the key is to see if it does head down to the bottom of the channel, does that channel still hold? Because we have these 2 daily and weekly vectors here that will line up with the bottom of the channel. So that's definitely one worth watching if price cannot get back above that key level, or it comes back to it, retests it, and then heads further down. Finally, let's look at the Dow Jones, because even that last night started to come into a vector candle. Now I think it was the daily, it was. So if we have a look at the Dow Jones, which a lot of people, not a lot of people, smart people say that Bitcoin follows the Dow Jones more closely than anything else, and it's only by a few days or weeks that there is a shift in a major trend change. So this isn't on a daily basis, this is on a major trend changes that kind of follows. But we are now heading into this daily vector candle right here, creating another vector candle, and if it breaks through that, the next one is also at its all-time high. So yeah, we've got some really key areas happening in the markets that are definitely going to affect crypto once the decision is made at those key areas of interest. So it is definitely time to add it to your charting process to have a look at what is happening on these daily. All right guys, I'm going to leave it there. If you enjoyed this video, please smash that like button, hit subscribe if you're not already subscribed, and check out the links in the description of this video to come and join us to learn this method in full, and also grab those exchange links to get some bonuses on the exchanges that you would like to trade on. See you next time.